Welcome, everybody, to another episode of the Good Deeds Note Investing podcast. I am your co-host, Chris Seveney, alongside, I think for the first time in 2022, did I say that right? Or did I say it wrong? I don't know. I can't say 2022. I keep saying 2020, 22 too much. Whatever I say. Jamie Bateman. Jamie, how are you today?
I'm doing well. Yeah, sun is shining. It's a new
Birds
year.
Are chirping.
Birds are chirping. Yeah,
and
excited to be here.
You don't sound it, but that's okay because we got Shante Duffy from BIFI Loan Servicing with us today. Shante, how are you?
Amazing. Sun is shining up here. Birds are still chirping. And I'm excited to be here today.
Did she sound excited?
She did, actually. Much more excited than you. So
what do I have to do? A backflip?
Yep.
Possibly. I don't know. That's a good question. I don't think there's enough room behind you to do a backflip for those watching us on video. So, well, thank you all for joining us. As we mentioned, we got Shante Duffy from BIFI Loan Servicing. Many of you know Shante, but Shante, why don't you do a quick intro on who you are, what you're doing, and then we'll get rolling into our typical episode of what just happened.
All right. Well, I'm Shante Duffy. I am the VP of Operations here at BIFI Loan Servicing, a new servicing company into our space, and just been running the day-to-day operations, building what I believe will be the best servicing company out there. So that's where my focus is at, and that's what I've been busy working on.
Cool. And you've been open now since October, roughly?
October 29th, so I'm kind of rounding up and putting November 1st of 2021.
Okay, so about 2.5 months. How's business going?
It's going, it's moving a lot faster, but also slower at the same time. We have just overall roughly about 200 loans under servicing, well, just give or take, about 4 million in UPB currently. So we've been busy talking to investors, getting them set up, boarding their loans, and working with other servicers to get the data over.
Cool. So sounds like note investing. You go fast and only go slow. So it happens with services as well. Well, again, thank you for joining us. As full disclosure, many of you know, Jamie and I have invested financially in BIFI's interests. While we don't have any involvement in the day-to-day operations, we did, provide some investment dollars within the company. Jamie, why don't we start with you on what just happened this week? Wins, losses, IRS issues.
That's exactly what I was going to talk about. Yeah, actually, there's been another update since I talked to you, Chris. But yeah, I've got some craziness going on with some PPP loan fraud. So the Paycheck Protective Program, whatever it stands for, came out because of the pandemic and everything, where the Small Business Association was giving these loans to employers to help continue to pay their employees during the shutdowns. Apparently someone filed in my name a fraudulent application for a loan. Yeah, Shante doesn't even know about this, so this is a genuine reaction. I guess it was March of 2021. March 24th, I believe. But anyway, they filed for and received a loan. I think it was $170,000. I didn't know about this. I was getting little inklings here and there over the last, 10 months or whatever it is. Kind of like things that I thought were unrelated, odd things that were popping up. I would get IRS notifications that my business address had been updated, and I kept getting them for this one particular LLC, which, by the way, I've never had a single employee in that LLC, and this is the LLC the person filed the application under. So I would get these little things and then I would get calls from this company that helped process a lot of these applications and help people do loan forgiveness programs and things. But honestly, it sounded like these car warranty expiration calls that you get. And I just was kind of writing it off for the most part. But I did contact this company back in September and I said, hey, keep getting these calls. Can you look into this? I don't know what this is. And they said, oh, there's no record of this person or you or anything in our system, so don't worry about it. This was September 30th. Turns out that, yes, in fact, someone had filed with this company an application in my name with my social security number, with my EIN for my LLC. And like I said, applied for a $170,000 loan, got it 2 days later. Well, the way I really found out about this was I got a $105,000 IRS bill last year. So late last year. So my CPA has been working on this, trying to keep the IRS at bay and basically buy 2 months at a time, because they're so backed up with their different departments. They don't actually talk to each other, of course. And yeah, I'll leave out the latest update. I'll let you know about that after this. But yeah, so I had to file a ID theft report with the Small Business Association. And so far, nothing on the personal side looks like it's been affected, but not really, something you expect to get into when you get in, started. This LLC is actually really for rentals, even though they put mortgage broker on the application, and they said it had been started 4 years before the LLC ever was in existence. So clearly the lender did not do its homework. Anyway, that's what's been going on with me lately. It's something I didn't expect to have to spend time or energy on. We'll see where it goes. So just be careful. I still don't know exactly how they got a hold of all this information. It also included a picture of my driver's license that was submitted. So yeah, just be careful what you share online and what you're sending back and forth in email, I guess, is maybe the tip for that. So that's enough about me. Chris, what's going on with you?
So if I understand this correctly, last year someone took your information and basically submitted a $170,000 loan. Wow.
Yeah, and
thankfully it's not like you sent me that information and then I went and like bought some property other places and then felt a little guilty, so sent you a computer and a camera and stuff like that. But no,
and on the application, to be clear, they stated that I had 12 employees and a $47,000 per month payroll expense. So I've never had a single employee in this LLC, and so therefore I have no payroll. So yeah, apparently there was a lot of fraud going on at this time, and the application was submitted in March of 2021, but they used falsified 941 IRS form from a year prior. And I think what was happening was they were changing. I wasn't getting these IRS notifications that I owed all this money because they were changing the address and they were getting it, and they created a false email, address, and I was not made aware of all of this. So yeah. Anyway, yeah. Thank you for the camera, Chris. And we're all over
very
the map
expensive camera
today. Chris, what's going on with you lately?
Let's see. Been super busy, so kind of had my head buried in the sand a little bit, trying to catch up on a lot of things I have going on. We recently acquired 2 assets, loans in Washington, D.C. that were in a bankruptcy, but it was in a involuntary bankruptcy. So the lender kind of forced the bankruptcy in that sense. So I hadn't kind of done that before, but things are going well on one of those assets. We were able to reach an agreement with the trustee on what is called a carve out, which is kind of their fees for managing the bankruptcy process. Had the property listed for sale and had 9 offers on the property. So we're waiting for those to get reviewed by the agent and submitted for the courts for approval. The other asset in that group is still waiting on because there's a second lien holder. And they would get, essentially, there's no equity in the property, so we have to short sale it. So it's essentially giving them, agreeing to a certain token value to give them. And if they don't accept it, then we would just pull it out of the bankruptcy and foreclose on them, where they get nothing. So it's really in their best interest to agree to this, but it's our attorneys that just having a little trouble getting in touch with their attorney. So
I'll just chime in because I do know, decent amount of what's going on with this particular deal. Yes. And I'll just say that, would you agree this is in some ways outside of the norm as far as, your own experience with non-performing loans, as far as the payoff and principal balance? They're big deals. right?
Oh, yeah, the one of the loans has the UPB was 1.5 million. The payoff now is a little over 2. And the second one had a UPB of like 550, and I believe the payoff on that one right now is right around 700,000. So the combined between the two of them, the total payoffs are close to $3 million.
Yeah.
And
So
it-
these are big. This is a big deal. And then also, you know, that you mentioned the involuntary bankruptcy. And then I was going to say there are also bridge loans, which
they're,
you may or
they're
may
fix
not
and
have.
flip loans.
Yeah.
Yeah.
So
So
more short-term loans. So, but
Yep.
what I wanted to draw out quickly was that you are playing to your strengths in that, you know, they're situated geographically in an area where you have boots on the ground. You also have an attorney who can work this that you've worked with quite a bit, but you went outside your comfort zone a little bit in a couple of other variables. So I just think that's a good takeaway for the listener. It's like, make sure you have 2 or 3 things that you're comfortable with that's in a deal, but then, okay, stretch over here on this side. So
yeah, I
anything.
mean, it was, if this wasn't in my backyard and I didn't have the attorney I have who actually knows the bankruptcy trustee as well, I would not have, there's actually a third asset in a deal, which would have put the total per acquisition over $2 million for these assets, but that one ended up getting pulled at the last second. So yeah, it definitely would not have been the path that we would go down from that perspective. So that's kind of been taking up a good amount of time finishing up my books with my bookkeeper to submit for all the entities that we have as well. Also got a bunch of assets under agreement between my multiple funds. So starting off the year strong, getting right now I've got, let's see, there's several in integrity we have. I got 4 in another fund under agreement, 4 I just closed on in another fund. And I'm looking at another 4 assets right now, 1 in Hawaii, actually. So, that would actually tick off another state that I haven't invested in. So the other one I'll mention just briefly before we roll in, because I feel, we've got Shante just sitting there patiently waiting.
Sorry, Shante.
You're fine.
I'm looking at an REO right now. This one's crazy. It's been 10 years and it's actually an REO, and they can't evict the former borrower, because he built an addition on the house onto the adjacent property. So the house spans over 2 property lines. So his whole case is based off of, you can't evict me because I'm not on your property. And he loses, but then he wins, and it's just been back and forth. And basically, we're guesstimating that the attorney, between taxes and attorney fees, they have probably spent over $500,000 on this case. So,
Wow.
so yeah, so
Incredible.
me being me, I said I'll take a look at it. So, but
Just diving in over there.
Definitely open to
Shante,
new challenges.
yes.
Yeah, Shante, what's going on with you?
Good stuff. I've been feeling pretty successful. Kind of ran into a bump this past week with some line of credits that I've been servicing, and trying to push those through foreclosure. And as everybody knows, you need payoffs and reinstatements in order to generate a demand letter.
So I'm just going to jump in because I keep doing that this episode already. But if we can just back up briefly, and explain for the newer note investor out there, somebody who's not bought a note before, or maybe they have one deal that they created and they just service it themselves or something like that. What is the main purpose of a loan servicer? What functions do you offer?
You need a loan servicing company to stay in compliance with federal and state law. That at the very bare minimum, that is why you need a servicer. Servicers are responsible for processing any payments that come in from the borrowers, sending out monthly statements, late notices. Those are the basics, but they do so much more as well. Not every loan that they service is performing. Therefore, there requires, for the non-performing loans, some loss mitigation, borrower outreach efforts to come up to some sort of solution. And then, of course, if they can't get a hold of the borrower, you guys can't come to an agreement between the lender and the borrower, the option to take legal action is there. And servicers will coordinate that between the lender, the foreclosure attorneys, and the borrowers as well. And then, of course, there's bankruptcy that we coordinate and manage on top of that. So,
yeah, I in very simple terms, but I used to think of it as kind of like if people are familiar with a buy and hold rental property, a lot of times they don't want to manage that, so they get a property manager. So I do think a loan servicer is probably a little more involved, and certainly from a licensing standpoint and that kind of thing. But it's kind of analogous, I guess, to a property manager on the rental side of things. You're interfacing between, the investor and then the either borrower or tenant.
The difference I just say is, like Shante mentioned, typically you pretty much need a loan servicer. Property manager you can kind of do on your own, but especially now with the new, I think it's Regulation F regulations that came out about different things now you need as part of, especially on the distress stuff of a foreclosure. And, the statements now, I think, got to have, or you have to provide last statements and stuff. I've looked at several notes that people have kind of self-managed in from that perspective, and they're just a mess. Even if they're commercial and stuff, it's, they're just a mess. And to try and clean that up versus a property, it's much easier to clean up a property that somebody's kind of left flailing versus a note. But
yeah, that's a good point. That brings up, if you're buying a note that's been self-serviced, it's going to have less value than, if I'm buying a rental property, I don't really care if it's been professionally managed or not, so
buying a church right now, note on a church, and looking at one in a horse track.
Didn't Gail have a note on a church a while ago?
Oh no, she actually bought a church. No, she bought it at tax sale, and she finally she thought she was going to turn it into apartments, and then she started going down the process, and then realized, like, I don't want to do this, which I don't blame her. So I think she actually recently sold it. So
okay,
but
gotcha.
I'll shut up now.
Yeah, me too. So Shante, you were just getting into.
So my win for the week.
Yeah.
As I was saying, line of credits, they run differently in servicing softwares. They run differently just based on how the note and the actual line of credit is spelled out, and realized that there was kind of a bump between us being a servicer and foreclosure attorneys on the information that the attorney would need to generate a demand letter, which is needed in order to move forward with the foreclosure complaint. So when I had the opportunity to get on the phone with the attorney and figure out what exactly is it that they needed, and what was missing from the information we actually provided them with the original payoff that we had sent, that they had rejected, and then sat down, talked to her, went through everything. She was very honest, very helpful, but just kind of had my wheels spinning. So I'm like, oh, and it comes down to a system situation. We use the mortgage office here at BIFI, but realize the system is fully capable of handling lines of credits. That's a big reason why we also chose the mortgage office, to make sure that it can handle loans like that, and realize that there was like a missing step almost. That's the easiest way to explain it, and realize that, wait, this is how this actually needs to get done in order for the attorneys to move forward with generating and mailing out the demand letters. So once we tested it and made sure it worked, sent it back to the attorney for approval, make sure it was everything that she needed to move forward, and got that green light, and realized, hey, this is super simple. It kind of felt silly. It was one of those like light bulb moments, like, well, why are we just not doing this? And it actually worked. So I was very excited. I don't think I've been that excited about something in a very, very long time. If I could have jumped through my computer, I would have just like hugged the software. But it was a big deal, because I know that there's lenders that physically like don't move forward with foreclosures or hold them up, or they're trying to finagle a payoff when it's like, it shouldn't be that difficult. It's stuff that servicing software has. It just, you have to do it, and you have to look for it and make sure it's done correctly. So that was my major win this week. And I was so excited.
You're nerding out a little bit here.
I really was. I was all day. I run around telling the rest of the staff, like, guys, I figured this out. It was a huge win because, again, line of credits run like credit cards. That's the closest way for me to equate them. And their billing cycles are different. Their account closing statements look different than a typical payoff, but was able to find, exactly what the attorney needs.
So here's a question I have for you, because I just ran into this where I'm trying to foreclose on a line of credit. I don't know why my hair gets so gray because of this, but I can never get like the right information, or it's always wrong. And I understand it's like a credit card, but you mentioned closing statement. And here's the reason I asked that. I had a borrower who was like $3,000 past due. Okay. And they basically made like an $800 payment. and they they did like a closing statement, and now they're saying like the payment is only like $40 per month. And I'm like, wait a second, that it's impossible because there's like $15,000 left on the loan and there's like 6 years left. But I'm like, where are they getting like only a $40 payment when the payment's supposed to be like two something a month? And it just, I'm completely confused.
So they're definitely run off of interest. The line of credits, they're not necessarily a fixed rate. Sometimes they can be, but that just sounds very low.
Well, that's what I'm getting at. And I guess my question, and sorry to interrupt, is
No, you're okay.
the line of credit is, okay, like I can take money out at any point in time.
You can
But
draw
yeah,
up to a certain point.
up to a certain, but at a certain time that gets cut off.
Correct.
Once it gets cut off, doesn't it really just turn into a normal loan, amortized over like
the remainder of the repayment period is what it's called?
Yes.
It does. There are factors. There's some line of credits that, their interest rates, they do amortize correctly over the like they're supposed to over the remainder of the length of the loan. What changes sometimes, which is again somewhat similar to a conventional loan, is that it almost like an arm. Sometimes the interest rate will change, and it changes based off of the prime rate. That's when they change. There are also lines of credits that are based on a fixed rate lock. So no matter what, once they're in that repayment period, fixed rate lock, their interest rate does not move. It's based on a treasury amount plus the index or the margin at a specific time. So at that point, it's fixed, and there really is nothing weird about it. You can't draw anymore. That is a question I've been asked numerous times, because when you actually break it down, you're kind of like, wait, this makes no sense, especially on the fixed rate side.
I do think just this may fall into the category, just like probably half of the questions in the note space. The answer is it depends. And that's for Mike Schultz. But like I have a line of credit on our primary residence, and I believe after the first 10 years is what you're talking about, just the interest payments, and then the second 10 years, I don't think it's amortized, but I think it just depends on how the bank sets it up. So
it also depends on like how it's written, but they should just, I like the fixed rate ones better because they make more sense to me. They just click naturally. Not saying they don't make sense. It just, but again, you're supposed to kind of treat them like an adjustable rate if they're not based on the fixed rate. Like, but it's there still is a maturity date.
But a lot of servicers have run away from kind of working with them, right? Because
they run away because they're not knowledgeable, or their system can't handle what needs to get done. It's usually one or the other. It's not just because they don't feel like it. They do require extra work to make sure everything's calculating correctly, but it's either you're not using your system's not capable, and I've been in a position where certain systems aren't capable. You get a new system, you're not using it to its full capability, and not realizing that, hey, this is how this works, and going from there. So it's either the lack of the knowledge. I know that there's a servicer that I kind of just, every time I see line of credits from them, like, what are you doing? Because I basically have to start it over when it comes to my desk. And then there's servicers that, have been dealing with them. They're not worried about it. Their system can handle it and it works. So it's kind of a mixed side, but that was my gung ho moment.
Yeah, that's a big one.
I think it was like for at least the first quarter. There's one other thing that's going to come up soon that I'm pretty sure I'll be way more excited about. But that was a big deal. That was a very, very big deal for me to realize. And so that lenders also feel comfortable, because they either are not buying lines of credits because they're like, oh, well, I can't foreclose, or they're buying them sitting on them, wasting money, having it serviced somewhere, and they can't move forward. At that point, it's a sitting note, and you're
because the servicer can't get to the attorney the documents that they need,
that the attorney needs, and isn't spending the time asking the attorney, well, why is this wrong? And then going back to the software and saying, this is what the attorney needs. It's servicing software, so it has to be able to do it.
And in those instances, Jamie, like I had a bunch in Ohio, I wasn't comfortable because I didn't think the information was actually correct. And I don't want to submit something or have the attorney review it and get caught in the quandary of having incorrect information that we're taking legal action on, because, it seems like every time I have a headache, it's in Ohio. So
your favorite state.
My favorite state. Now, Shante, you mentioned, I know also, like, that was a big win. I saw in the Facebook group, you also mentioned a portal coming as well.
Yes. Been working very hard with developer on creating a nicer, more robust, user-friendly portal for lenders. I have heard, and seen other portals and things like that, and lenders love certain things about it, hate certain things about it. But I also know it needs to be simplified. I do understand that a lot of investing is not your full-time job. So you guys need to be able to like sign in really quickly. So we're kind of in that last phase of just tying up some loose ends. And I'm hoping to have this out within like the next week or two. And have, get some feedback from, our clients that we do have, see what they like, what they don't like, if there's something that's missing. Of course, this was also built with a lot of feedback before even starting it, just to know what we need up there and how it should be, like how you guys should see it. So I am so excited because the portal that we're currently using, it gets you the information, but it's not fun. It's not pretty. It's not super interactive. There's a lot of information that you're missing that I feel like lenders should have, and you should never really have to ask for most of your information on any of your notes. The goal is to have everything up there. You should never be flying blind. I need to know that when you guys are up in the middle of the night because you can't sleep, you can search through your notes and be like, okay, and everything's there. You should more so have questions on like executions of things, and working with your servicing account specialist here, opposed to like, hi, did my borrower make a payment? Hi, when was the last time you called them? Try to get you guys to refrain. Like, I'd rather you focus on your investing side than tracking and chasing down your servicer for information that is actually readily available for you. So that is the most important to me for lenders. Kind of avoid that. And then you guys ask questions on the information you do see, make these questions and things productive. Everybody, time is money. I get it. So I am super excited on how it's coming along, and we're literally right there. So
yeah, hopefully it'll be ready right around when this episode comes out.
yes.
I know Chris and I have each used several different servicers, and one servicer that comes to mind, their portal is robust, and honestly, for me, it's just too much information. I don't need all that information, so that it gets cluttered. And then another servicer, the portal is just bad. There's not, you really can't find servicing comments, and then another servicer, there's two separate logins, and so I think what it sounds like what you've done is taken investor input based on many different servicer portals and try to come up with the best solution for the lender.
Definitely need a one-stop shop for everybody. That's the goal.
That is important,
and make
it
it
also
clean.
it also will allow I guess you and your staff to focus on actually servicing the loans, as opposed to kind of being in the middle of that, all of the communication with for the lender as well. So it should allow you to tighten up processes. I was going to ask quickly, what do you think is the area that BIFI needs to improve the most?
I feel like it's a tough question, but I totally get the question. For me, my perspective, we're still kind of getting our footing, being brand new. So we're obviously have seen a lot of the situations, whether it's foreclosure related, escrow related, bankruptcy related, or just borrower outreach, like loss mitigation and things like that. And what we've outlined in the beginning, I'm realizing like, okay, this process doesn't actually work, or it's not, when certain situations arise, like it's not one size fits all. And realizing like, okay, we need to better this process, or we're missing a giant step that, being in the space for almost 9 years, I know, but I don't think to break down. And again, my staff hasn't been in this space for 9 years. So they don't have the same amount of knowledge. So there's a lot of like holes that we're kind of realizing are being poked and made, but I've been trying to fill every hole. Just because again, it's until you're in it, we spent months trying to put together processes and things like this. It's like, okay, this works. And then when you actually do it, you're like, this does not work. There's a step that's missing, or this doesn't work because the chain of basically command and how it goes through isn't clear. Lenders aren't being informed enough. That was a big push as to, the communication is very, very important, but it's not just to lenders, it's communication within BIFI. So the employees of BIFI, we have to make sure our communication, chain is clear and concise, and it's okay, step 1, step 2, it goes from here to here to here. We need to connect the dots. And what I'm realizing is we're like skipping dots and then we can't form anything. So there's little hurdles in almost everything we do, but we're catching them, thinking about it, and okay, how do we fix this? Because overall, those little holes, they might have affected one loan, but big picture, they're going to affect many, many, many more loans down the road. So it's kind of like tightening up and perfecting almost like a base plan that we had, and making it a little bit more detailed and a little bit more user friendly. A lot of things we have been automated, which is very, very helpful, but then there's still steps that we have to take with that automation, and there's still, timeframes that we have to follow as well. So it's just kind of pulling back and slowing down a little bit, figuring out what needs to get updated. So it's just reminding, like, hey, we had these processes, we haven't seen some of these situations yet, and then as they're coming in, we're like, oh, so something like the line of credit, so I'm like, well, this isn't working. We have to fix that.
I think that's a
So-
normal, I mean, with any small business, it's like you're actually trying to service the loans you have, right? In this case, but you're also trying to tighten up your processes. It's hard. It's a lot to juggle. So
It definitely
I
is.
think one of the benefits that I've seen, and you mentioned like getting this portal up and running, has been because the portal you have right now through the traditional, I think it's through traditional TMO, kind of gives you like pay history and some of the comments and stuff. But I know you're working on something extremely robust. But because of that, the communication with the service
Loan
rep,
servicing,
the
yeah.
loan servicing rep, to me has been the most I've seen compared to other servicers. I mean, the amount of emails or information I get just updating me on the status, and it's not like once a year or once every 6 months.
No.
And that, and then another thing, just, and again, back to the communication. So that, just understanding like what's going on, even though like loans are, could be current and stuff. The email of like, oh yeah, this loan's just FYI, just keep you updated. This loan's current and stuff. Between that, the taxes and forced place insurance, which God bless, because just understanding like, oh, your tax is delinquent on this, or, hey, we're handling the escrow on this, not we're boarding the loan. So give us the insurance certificate and the taxes. And it's like, I'm paying you all this money and you can't go on the county. Like, here's the link to the county website. And they still won't
I've
take
had
it.
that with a servicer where I provide the link where they just have to put in the address to look up the property tax information. It's free. It's right there.
Yeah,
They won't
They
do it.
won't do it.
Yeah.
I think that, with BIFI, when it kind of was created, there was a lot of time that, was spent on figuring out like, what is everyone's biggest pet? Like, why do people not like servicers? We are always the bad guys. Nobody likes us, but you need it. You need
Nobody
a
likes me either,
servicer.
so it's okay.
Nobody likes servicers,
But we
though,
need
but
you,
you
Chris.
need one.
We still need you.
We do.
Not really, but
But because the servicers usually get such like a bad rap. And so it came down to, okay, I need to talk to, and I've, again, been in this space for almost 9 years, met many, many, many different investors, some small, some big, some who just kind of dive in like you, Chris, and some who are a little bit more like cautious and take their time like Jamie, and everybody in between, and everybody on everything. So I asked for some serious, honest, and it didn't matter what servicer they were talking about. It didn't matter. It's give me the pros. I want the good and the bad. You want to talk all bad? That's fine, because those bads I need to focus on, those goods I needed to make great. And that's kind of where that came through. But the number one consensus from everybody, and I think you two, I know you two as well, was communication. And it's kind of, to me, that's silly. Like, everybody talks, like you should know. And that to me was the most important. There's no reason you should ever be guessing. And I don't ever want a phone call from any lender. Like, I haven't heard from so-and-so. I can't stand those phone calls. I don't have the time for those phone calls. So it's kind of just getting everybody to understand that, like, this is your job. You are responsible for this investor's loans. You need to communicate with them. Don't wait for them to come to you. That's where we're trying to really push.
That's exactly like, as you were talking, I was thinking of a particular servicer that I use, and they're honestly pretty good overall, but it's very reactive. And it's just like, hey, if you're in foreclosure, the servicer will reach out to me and say, hey, I need an update on this. And it's like, wait, why? You should be updating me.
Well, that's why we also don't, this is why we don't allow investors to handle their own legal action. We shouldn't, as a servicer, be in the dark either. We're kind of supposed to do everything start to finish. I know that no one says you can't be a part of it. We're going to make sure you're a part of it. You need to be a part of it, but we can't be, no one should be left in the dark.
Right.
And that's why that's still the communication side, is that, okay, you have a servicer talking to an attorney, but where's the investor in that communication? Nowhere. They have
So
no idea what's going on.
question for you, because people are going to say, well, of course Chris and Jamie put their loans there, makes sense, right?
Not all of them, but yeah, you
Well,
guys
that's true.
have.
That is true. But how many other lenders do you have currently?
I have a total of about 32 lenders here. We have loans that are pending coming through right now. Honestly, the biggest issues we're waiting on data from other servicers. So it's not that the lenders haven't done what they, need to do, got their forms in, collateral, everything. It's now in the servicer's hands, which are a little frustrating. But then we also have like new investors that I love talking to. New investors, they are my absolute favorite. I just, I like that they ask questions. They're not sure, and they're very honest with you. I have no idea what I'm doing. And the whole point is, and I don't always talk to them in the sense of just BIFI. It's like, this is what it should be across the board. Every servicer has a requirement to set themselves up, to get information over, to get your loan boarded. Most servicers do offer force-based insurance, like running through the services and things like that, collateral storage, stuff like that. We do those things as well. But it's fun talking to new investors and talking to investors that like I've known well before the two of you, and that they're kind of like, wow, Shante, and they were definitely a little hesitant. Just because, again, anything brand new, most people expect things to fail. You're kind of just like, how great can that be? You got to give everybody time. And at this point, it's, I talk to them and I'm letting them know, like, because they're investors that I've worked with and they've had so much experience as well in the note space. It's, well, I also want your feedback. I don't, it's not just like,
Right.
oh, come to BIFI because it's mine. It's, I know you're going to be honest with me because you've been honest with me in the past. And when you don't like things or things aren't working, you don't shy away. I want everyone to know that regardless of what happens at BIFI, you're not going to hurt my feelings telling me that I need to do better or that my team needs to do better. I need that feedback.
And I
Go
think
ahead, Chris.
people too, like, ask the question because you're new, how many employees you have an office, that type of stuff. You want to just kind of break down a little bit of the size of BIFI and everything.
So I have, there's 1, 2, 3, 4, I think there's 5 employees total.
Think or no?
No, 5, there's 5 of us. There's 4 of us here in the office.
Yeah.
And I have 1 person that does not work in the office, but they don't need to for what they're doing. We have 2 servicing account specialists. Our accounting department does not need to be that large at where we're at right now. So again, starting off, when I said like we were starting off slow, it's almost a blessing. I look at it as much as I'm super eager to run and just get everything together, we're perfecting these processes. So getting my staff to also understand, they haven't done this for forever either. So there's definitely like a little bit of learning curves there, even on my end. Just starting BIFI, there was major learning curves.
But your staff does have servicing experience.
Yes, I selected my staff specifically because I didn't want them to be completely non-existent in understanding what loan servicing is, because it is such a unique and special like thing that it's not like you're just like a cashier at a store. It's not just learning the system. It's, learning how to work with borrowers and lenders and knowing what you can and can't say. And there's certain things that you can train people on, but you don't really get it until you're doing it. So we deal with borrowers and lenders who are super happy and super nice, but are also could be the polar opposite of that. And you kind of have to have some thick skin in here to deal with both sides. Again, it's not just borrowers. You have borrowers, about to lose their homes to foreclosures, and somehow you're the bad guy. Then you have lenders where this is your investment, whether it's your money or somebody else's money. There's a connection and a tie and emotional ties there. So it's trying to balance both sides and trying to keep both parties happy, which is why it was important to have staff that understood that, yes, we work for the lenders are our clients, but we still have a whole nother party we have to worry about and keep that together and make it make sense. So some days are great and fun, and then some days we have these bars where we're just like, what is going on? And it happens.
And Chris asked about the property or the building. Where are you situated?
I am in Hackettstown, New Jersey. It is like 10 minutes from my home. We bought this office space back in the summertime. I can't even remember the exact date. We technically have 2 units that we're actually working out of, and we'll expand as we expand into the other But we chose to purchase it. We don't want to have a landlord coming and kicking us out because they chose to sell things and things like that. So we do have our own office space. Everything is done here. Payments, the payment address and the corresponding address is not any different. Everything is one spot. So
back to
good
the
old New Jersey.
employees, back to employees, I think we were talking at one point in time, everybody who's with BIFI either has extensive servicing experience at a servicing company or at a financial institution / bank, correct?
Yes. Every
So-
single person here, myself included, we've been in one of those two places, nowhere else. So I'm not just getting a random, again, like cashier that's like, oh, I just want to go. It's they have at least the base knowledge. The hardest part is just training them to meet what BIFI's goals are. And again, that's just training and training people. It is a challenge in itself, but
So
Yeah.
well,
Go ahead, Jamie.
what would you say is some of the feedback you've gotten from the other investors, other lenders, besides the two of us?
I try to talk to a lot more of these other investors, and I like when they send me feedback. We do these things with just notifying investors about, like, as Chris said, like what's going on with your loans, whether they're performing or non-performing. We don't want you to ever ask. We kind of give you the game plan of how we're going to be working. And I think that's everybody's favorite part right now. The timing on how long it's taking for like loans to get boarded, they're very surprised. But again, that came down to a process, and a lot of that process is automated. So that's a big side. They're just very surprised and shocked, but they love the summaries. They love the fact that they're getting emails or calls, especially when a loan's boarded. Hey, we want to talk to you. I don't want you to just be someone I email all day. We want to physically get you on the phone, and just, if you have one performing loan, it doesn't matter. If you have 10, it doesn't matter. We want to specifically talk to you, introduce ourselves to you. We have to kind of have a relationship. And that is kind of like the biggest push on how important it is. And we want you guys to be comfortable with us as well. So we sit here and we set up a time to speak to everybody and talk to them and get game plans if their loans are non-performing, or just, hey, touching base, this is the goal, this borrower is performing. Let's see if we can get them on ACH. Just something simple. It's those little things, those little like extra things that make a huge difference. So the biggest feedback I've gotten is that they love the communication, and their next feedback I'll get from them is definitely on the portal, because that's, where I'm looking for. And I know we've been telling them, we've been telling them about it. We've been honest with them and letting them know, like, hey, this is not permanent. But I'd rather take the time to give good quality things to lenders than rush and just give you something. So you have a temporary item.
If any business ever says, okay, we have arrived, we're perfect.
I'd love to know.
I'd run for the hills. So I think it's good that you're always looking to improve.
And Jamie, Shante sent me a few photos of the portal. Did she send them to you as a beta test to get my feedback?
Yes, I saw a little bit of it.
Damn,
It looks really good.
You
so
were
far.
there. No, Jamie, you and I have you on my calendar for Tuesday anyway to talk to you. So don't think that I forgot about you, but because I didn't. And your feedback's usually good because you see things that I don't see. You definitely see things that Chris doesn't see. But there's specific investors that I need to speak with, because I appreciate and need their feedback, because they're honest. It's never, I'm trying to be the best I can be for you guys.
So,
and I can't do that without you.
I may have to sit down on this, because you're actually going to take investor feedback and kind of incorporate it or try and implement it in how you manage your business.
Yes, because as BIFI, by investors, for investors, the FI is really important. I can't be for investors if I'm not willing to hear what investors need or what they like, what they don't like. I have to be open. I don't want to be one of these companies that exists and they're just like, well, we just don't want to do it. We're in a really cool spot to where we are new. So the feedback early on is really helpful, because at that point you just build. It's a building. It's not that we've been existing for 20 years and we don't want to change. Change is good. Change is positive. You got to change with the times. So keeping up with that, it's very, very, very important to get the honest feedback. And if people hate it, they hate it. I'm not saying I'm going to change everything, but I need it to, because if one person says one thing, I sit down, how many other investors are going to have the same question, issue, comment, concern, and does it appeal to the masses? It's not, this portal's for you, not me. I have all software that I work out of. So it's very important. And it's not just on the portal, it's just in general. If there's something you're not getting, tell me. If you don't like the way something's happening, I need to know. I don't like when people are shy. I'm not shy.
I am.
Maybe around your wife, but that's about it.
I was gonna say, not the shy one here. But it's needed. It's needed for us to be successful. It's needed for us to be what you guys need. It's mandatory.
I was gonna say, my wife just texted me a photo of their snowboarding today, and they're just eating, and my two kids look like she's like, sends me a picture. I'm like, they don't look happy. And she's like, they're just really hungry and tired. And she's like, your son says he's so happy to eat right now. So when he's not like when he does certain things, it's my son. But when he does the good things, it's her son.
That's how that works.
Yeah. I get that too. But no, I can, I mean, look, I'll be honest, if I don't blame any experienced or any investor really for not immediately throwing their loans at BIFI. I totally get that. Why wouldn't they let somebody else be the guinea pig? But it sounds like you've got, Chris and I have had loans there, many loans there for what, 4 or 5 months now.
Yep.
And then I know you don't have loans boarded with all 32 of those lenders, but
but they're all pending.
Yeah. So, you've got people you've got other lenders actually using BIFI and having a positive experience with. So to me, it's like, okay, there's enough there for, hey, throw 5 or 10 loans. If you own 50 loans, throw 5 over to BIFI and test it out.
Jamie,
that's what I tell everybody.
What do you like the most from out of the work
communication? We get we get a weekly email that's proactive with every loan that the loan servicing agent is working on. And so it's proactive. It's like, okay, this is BIFI is actually working on my loans as opposed to me having to nag. And the screenshots of the portal that is going to be coming out look really good. So I'm excited about that. Also, I guess a lot of the automation on the front end with the forms, as far as an entity setup or boarding a loan, like you said, Shante, is pretty seamless so far. So I know there've been some improvements since Chris and I initially boarded loans there. And then also, I guess the billing, I keep listing things, but I don't like getting billed, but if I'm going to have to pay for this service, I may as well make it as seamless and painless as possible. And that's been great.
Well, and I'll jump into, from when you mentioned billing, but also accounts receivable, what you're getting paid for. It's broken down. So my bookkeeper's like, oh, this is easy. Principal, interest, charges. Like there's no, it's very clean. It's nice. It's easy. The other thing, you mentioned communication, but you mentioned too, like the proactiveness. So I've got some loans that using, BIFI's foreclosure coordination process, and, the information that they copy me on, that like they sent to the attorney, is like very nice, professional, clean. Everything's there. And basically, they copy you on it, and it says like, hey, make sure the communication stays between like the 3 parties. And then, when the demand gets sent or whatnot, I get copied on it. Or if it's not, they're following up to make sure, hey, just checking on status. Has this gone out yet? We just want to, stay up to speed. And from that perspective, again, that's something I used to manage, because in past experiences, when I'd have the servicer do that, it would take 6 weeks to get a demand letter out the door. And then be like, oh, well, I'm missing this piece of this document. It's like, they've done the upfront work to get that. So I appreciate that.
And this hasn't been, let's be real, it hasn't been perfect, but like the tracking of taxes and insurance, especially this time of year, now
where everything's due.
Yeah, where everything's due for taxes. We're getting from BIFI, we're getting an email saying, hey, this borrower's account is delinquent on property taxes. We have this much in reserves that we can put toward it. Do you want to advance, blah, blah, blah. But it's proactive communication and proactive tracking of taxes. Whereas with other servicers, I've had the experience where, again, like we touched on before, they're very reactive. And then I know on the FPI side, BIFI is handling the letter cycle.
Sailing.
Yeah, Chris, and you have your own FPI. We've talked about on other episodes through JB Lloyd, but that means you're responsible for following that, sending out all those letters, being CFPB compliant. I can't wait to hope you don't hear this, Beth, but get all of my stuff over to BIFI, where I don't have to manage all that from an accounting standpoint for FPI. Oh my gosh, it's been a real pain. And the more loans I can get over to BIFI, the less bookkeeping and administrative tasks I have related directly to forced place insurance. So that's been really good too.
So I've got one question for Shante before we get into the notes and bolts and so forth. Just please tell me, for every loan I ever bought at BIFI, that I never have to go chase down another tax bill again. Just please tell me that.
You have that was the biggest separation other than communication. That was the second thing. I should not be having, we're the ones, you guys need to keep your hands clean. We're the ones supposed to get down and get dirty and do the work. So no, your job is to keep investing. Keep going, keep looking at tapes, breaking them down, bidding. That is your job. My job as offering an escrow service to you is to actually service the escrow, which entails start to finish. The most would be, hey, I need you to advance money. This borrower hasn't paid. If you say, I know, Jamie's awesome at this. He sends tax bills just because they're being mailed to him. And just like, oh, I have this, which is, again, we don't need it. It's great, but thanks. We save it and everything else. But like, I will never ask you for a tax bill.
Old habits die hard.
Yeah, I know. The same
Exactly.
thing. I actually
Because you
did that
send
this
them
morning.
too.
I
Yep.
just did one this morning.
Yep.
I sent one on a loan. So,
well, because it's important. That's the thing. It's really important. It's
You guys don't have the time.
Nobody likes doing it, right?
No.
Tracking taxes and dealing with insurance.
Nope.
I mean, maybe somebody does, but I don't. But it's really important. So I'm glad you guys are.
Escrow is fun, Jamie, and it's profitable.
Yeah, right, and profitable.
It is once there's a
man.
solid process, but your job is not to do my job. That's kind of how I look at things.
Escrow is not fun for an investor.
No.
Let me phrase that. For me, escrow is not fun. But
yeah.
Okay.
Now, just real quickly, do you track taxes or insurance if you're not escrowing? The lender doesn't.
It's an option. It is an option. If you do not want to escrow, we've had a few lenders actually choose that. I think Chris recently had to choose that. That they don't want escrow on the loan. It's non-performing. They don't want. There's no escrow account. We're not paying out taxes, but they want to at least track it. So we set it up for that. So at that point, when taxes are delinquent, the amounts that are due, when we get the information back, that's what you are getting. But we're not paying it. There's nothing to pay. So it is an option on both sides.
Like I've got deceased borrowers, so I put on escrow. They're not going to pay. So you might, it's, but I still want to check the taxes because in case I have to go through probate or foreclosure or whatever that time may be, hey, I can still have BIFI monitor the taxes. And if they become delinquent, say, hey, by the way, you got delinquent taxes. So I don't lose the property at the tax sale. So, and you use a third party company for all that, correct?
I do. I think that's where it makes it so much easier because servicers don't like escrow either. But it's something that we have to offer. So leaning on third-party services to help us with just obtaining the information. There's a reason I don't need a bill from you. It's because that's somebody's actual job. They have a whole company that does that. So there are many companies, but we partnered up with another company to help us with that.
One other thing that just popped into my head, and either one of you can speak about this, but offering fund management services. I don't know if either one of you want to jump at that or if it's something more for the future. But, okay. I heard a little birdie told me that was a service that might be offered in the future.
Yeah,
Yes.
in the future. Actually,
Be on standby. We're working it. We're trying to figure out.
Shante and I, Shante, it's a service that BIFI can provide, and I have one of my funds being used as, several of them actually, test case where investors can log in to see the loans within the fund, as well as can run borrower statements. So if you have a fund that has, a preferred return of, pick a percent, basically the servicing software can run all those based on the investments, can run all of it. They can send handle the money if they wanted to, depends. There's a lot that can be done. And So we've been working, Shante asked me to behind the scenes work on that with her to offer that as a service down the line.
Because I know a lot of bigger funds, and they'll pay a lot of money to a third party to do that, to offer that service. Because it's not something that's, if you're used to managing loans, managing 5 or 10, 50 loans, you don't want to get into the,
Well, for
producing
someone like Chris who
statements
has
and
$1
things
billion
like that.
funds, that's why it was good to kind of have him
Yeah.
join that side, because he knows.
I think where
as you know too.
I think where it's more important is not only just looking at your statement, but somebody could actually see like this physical loans there, like in the portfolio, not like, hey, I just invested 100 grand. It's blind what I'd invested in multifamily. It's like, okay, I can drive by, see the apartment building I put in. And a note fund, it's like, okay, what assets make up this fund? Because it's usually what they call a quote blind fund. So you don't know, where as part of that portal, there's the ability to actually let the person log in and see, see the access.
Yeah.
Or see the loans. So.
I think it's great that you've tightened up a lot of processes, but you still have some projects in the works, that
I always will.
Working on. Yep.
To be great, you have to.
Yeah.
Cool. So Jamie, note and bolt.
Oh man.
I'll let Shante go last.
Oh gosh.
You have one, Chris?
I'll think of one based off what you say. Nothing's popped in my head yet. So
let's see here. I will say, Chris, go.
Okay. So my note and bolt for this week is kind of one we've talked about in the past, but as part of due diligence and bidding, understand the state that you're investing in. My membership group this past week, we just did a very in-depth presentation, which actually Shante is a member of my group and she's going to buy a note this year. But we just did, a very deep dive in Ohio and understanding. Yeah, it was pretty deep, wasn't it, Shante?
I learned a lot, and I feel like I didn't know half the stuff that was talked about, but it was informative.
Just the process in Ohio and understanding, the potential based off of, if mediation exists, if it doesn't, the different counties in Ohio. But most importantly, the fact that your actual legal expenses are not recoverable. The court filing costs, the preliminary judicial report, which most people don't know what that is, which is expensive, that can be recoverable, but the legal expenses are not. And I say that because I've seen a tape recently that people were bidding on distressed assets in Ohio with very low UPBs, and they're bidding at like 50 to 60 cents on the dollar. Well, if it's an $8,000 loan and you're bidding $4,000 to $5,000 on that, the Fannie Mae guidelines for legal fees is $3,000. So that ain't coming back unless it's a reinstatement. Even on a payoff, you don't get it, which is crazy. So that could be $3,000 out the door, plus your servicing fees, FPI, taxes, insurance. Like some of that can be added, but your servicing can't. So between your servicing fees and legal fees, you're not making anything. That $8,000 asset, you should probably be somewhere around like 1,000 to 2,000. But when people are bidding it up at 5,000, 6,000, and we've seen
it's not only true just for foreclosure, right? Like if you're saying like basically, like even if I wanted to try to mod the loan, right, and raise the principal balance, you can't do that because they're not recoverable, right? Those
correct.
That's crazy.
So
that is very important when bidding.
So that's kind of my note and bolt. And the second part of that component was, if you don't know, there's so many people to ask. Reach out to somebody and say, hey, I'm just looking at this. What's your experience in this state? And, there's a lot of people, Chad Erbshot does a lot in Ohio. I unfortunately do a lot in Ohio. Or pick up the phone and call, Cetilian Barilli. They do collateral reviews. So as part of that collateral review, even ahead of time, they can give you some information on what it costs, what to expect.
You should do North Carolina next.
It's already actually, that one's already done, buddy. So the PowerPoint's ready. You want me to do it?
He has to do every state. That's what I told him, because what came out of that, like everyone needs to go sign up for his membership or something, because you don't hear that. I've been in this space longer than him, and would have never, put that information together and didn't, and I've known Franco for years, but
So how
I
long
was
have you
blown
been in
away.
the space? 10 years, Shante?
9,
10
this
years in the note space,
9,
Chris.
10, almost,
Okay.
almost 10.
The funny
Never
thing
mind.
was, so when I did it, put together, I sent it to Franco. So I put together and said, Franco, here's what I want to talk about. And, I got a lot of this information, and it's 32 slides of data, not like 32 slides of fluff, like, hey, join me on Facebook, blah, blah, blah.
No,
It's actually
nothing's there.
32 slides of data. And he's looking at this and he's like, and how long do we have? I'm like, well, we'll talk. I said, well, we'll talk for an hour, but the information's there so people can always go back and refer to it. So it's the PowerPoint slides actually have a lot of text on them, which is unusual for PowerPoint. Usually you put the bullets and then talk about it. But I wanted this to be a webinar on understanding, hearing from the attorney ask questions, but also be able to use this as a takeaway to stick in your file for later on that you can always refer to.
Well, anyone who's spent any amount of time with you, Chris, is not surprised by that. I mean, you always over deliver on the level of information or the content.
But the best part is that a lot of the things that get discussed, they're from firsthand experience. So yeah, there's factual things, and you have an attorney telling you the cold hard facts, but then it's relatable when he's able to sit here and say like, oh, I dealt with this, and remember this time, or just no one does that. Like I was blown away sitting and listening, and there were so many things that I didn't even know. As a servicer, I had no idea.
Got my note and bolt. I think we're running a little long today.
All right, go.
We knew we would, though. My note and bolt is back to it depends. So regarding statute of limit, like I was sent a note to look at the other day, non-performing loan in Georgia. And I think the last payment had been 2010. And so my note and bolt is it can really vary based on the state as to whether the statute of limitations kicks in based on maturity date or based on the last time the borrower made a payment, or even based on, I think, the last time there was any kind of legal action pursued by the lender. So it can vary greatly as to when that statute of limitation kicks in. So please research with an attorney or more than one attorney in that particular state. If you're looking to either if you're looking at buying a loan where the statute of limitations could be an issue. I've had one recently where the statute of limitations, I was beyond that, but I was able to get the borrower to sign a modification and resolve that issue for me. So that's another sub note and bold, I guess. So
I tried to sell that loan back to the attorney last night, by the way, on Facebook. I was chatting with them about something else. The one you're referring to. It was out of statute of limitations. They signed the modification.
Gotcha.
I had to text the attorney last night, and I texted her and mentioned that if she was looking for investment.
I was actually, I forgot that one was in Georgia. I was actually thinking of a different one that you sold me in New York, but so it's happened a couple times.
Oh, okay.
So, but
Jamie, what about note and bolt about the emotional distress you're dealing with right now for $25,000?
You're handling that, by the way, very well, because I'm so
no, that's the IRS thing, but no, Chris and I are looking at a loan that
we won't get into too much detail, but there's counterclaims involved for
the borrower
emotional
distress worth however much, 90.
I didn't think people really claim stuff like that, but interesting.
It's my understanding, and again, talk to your attorney, that it has to be actual damages. You cannot claim emotional distress as part of like foreclosure and stuff, either party.
You guys get the fun stuff.
There's always a story with every note.
Shante, you must have tons of stories being in this for
I do, and they're so much fun.
So, but what's your note and bolt?
My note and bolt, and I feel like this is just like a universal thing, and I always stick by this. You need to ask questions as investors, and you definitely need to question your servicers. That HELOC line of credit to dot, I need everyone who's heard this, go question your servicer, unless it's me, because I figured it out. Question your servicer though. And if they actually can handle the full capability to what an attorney would need. I feel like a lot of people run scared for the wrong reasons on buying assets because they think of the servicers that they're used to using, and you don't ask the right questions, and you don't really light a fire under some of these people to figure it out. So ask questions. That's always, you have a right to question your servicer. I'm not saying you have to be rude about it, but definitely ask, and you never know. I know you guys ask me stuff all the time and I'm like, I don't know. Like there's things I just never thought about, or my brain works differently than yours. I'm used to doing one thing over other things. So ask. I'm always, everyone's trying to gain knowledge, share knowledge. That's what this space is really all about. That's what I take away from this space is, we're all trying to learn different things and share our knowledge so that we can all, come up. We're not trying to put anybody down here. So ask questions and don't be, especially from to your servicer, don't be afraid.
Yeah.
I like questions. So
It's a good one.
Good. Jamie, final thoughts?
This has been really good.
I'll let you close it out, buddy.
Yeah, I think people appreciate our podcast for many reasons, but one is that we keep it real. So we don't, we honestly need to sell our stuff a little harder, in my opinion, our own stuff, Chris. But and sometimes we can get down the path of like being too honest, where it's like we're so in the weeds that we kind of end up complaining about certain things or pointing out the negative, which I think people appreciate. But then we also need to step back and appreciate the positive of note investing and that kind of thing. So I hope people have gotten a lot of value out of this episode. We try to keep it real, but also point out the pros and cons of BIFI. And of course, Chris and I are biased at this point. We do want people to use BIFI, but the reality is we've experienced BIFI as lenders for almost 6 months now. And I can say I'm quite pleased. So, and I know sounds like you are too, Chris. So go ahead.
No, I am very pleased. And I think part of it is, the push is also people realize, back to what the biggest complaints with servicers is how things were managed, but the company is explicitly set up to cater and custom to lenders. And the whole processes, and when Shante says like training people and getting them brought up to speed, it's because they're used to doing things a different way from other servicers. And then there's the Shante way, which is different than the other ways. So that's where I think, people are, when she talks about growing and getting the systems down, it's not that people don't know what they're doing. They know what they're doing. It's getting them to go from, from here to the way Shante's, expects where the company to be, which she has them in my mind because of how, how the responsiveness has been and just how they're managing the foreclosure process like I would manage it. So that gives me additional time now on the 10 foreclosures or whatever with BIFI to go buy assets or look at other things because I'm not chasing down attorneys. They're doing that for me.
Well, and the other thing I'll add is, yes, it makes sense we would put real loans, our own loans there, but at the same time, these are real loans. These are we're managing funds. These are actual, loans. These are not dummy loans or something. So if it was not going well, believe me, I would pull my loans from BIFI. I mean, I have my own business to run, and I know Chris would do the same. So hopefully people can appreciate, other note investors and lenders can appreciate the fact that we're putting our money where our mouth is. And with that, Shante, any final words?
thank you.
All right, guys.
Short and sweet.
You're supposed to go out and do some good deeds.
Oh,
Yeah,
okay.
take us out, Shante.
Redo. Go out. What was it? Go out and do some good deeds. All right. Go out and do some good deeds and bring your loans to BIFI.
One more thing. Shante, where can people find you coming up in March? You're going to...
Oh, we forgot the most important part. BIFI will be at the DME on March 10th and 11th, and I think that's in St. Petersburg, Florida. And BIFI will also be in attendance at IMN on the 14th and 15th, and that's Palm Beach area. Yep. So yeah, you'll see me there.
Website,
and then,
email address for lenders.
BIFILS.com is our lovely website, and email address is servicing@BIFILS.com.
Don't forget to like and subscribe, and don't forget to go out and do some good deeds. Take care, everyone.